Hey traders, welcome to Charts and Coffee. Hope everyone's having a good morning. We had the CPI this morning, and normally in a situation where the rate cuts have already begun and the Federal Reserve has already sort of claimed their victory on the inflation fight, normally I really wouldn't be as concerned about CPI, PCE, PMIs. And you notice that they haven't been really as volatile or even as big a sentiment shaker as they were, say, the previous 9 months, going up until about September when those first rate cuts happened. Today, you'll see this giant candle on all the 5-minute time frames because the CPI was being released in front of the December 18 meeting. Obviously, it's only November 13, but that meeting had a lot of uncertainty as to whether or not rates were going to be cut. In fact, for most of, and I'll show you right here, for most of this month, expectations were in the 60s, high to mid 60s. And that means that the expectations for a rate cut were that high. The way in which the equity markets continue to rally into year end is twofold. Strength gets stronger. That's going to be the window dressing. And rate cuts are still coming. That's going to be the monetary policy where money is cheaper to borrow. It's cheaper to lend. It's cheaper. Equities love that, right? So we started off, I think I took a snapshot of this. If you want to know how important that CPI number was, I'll show you right now. I actually, one moment here. I took a snapshot of it in the Sector Secrets Mastery Room. There we go. This is what it looked like before the data. 58%. I'm not saying it's a coin toss, but it's not far from. Does everyone see that? That 58.7% expectation for the cut juxtaposed that 41.3% hold. It's really up in the air. CPI comes out flat. Whoosh. What does that say? The Federal Reserve can continue cutting rates because the rate cuts that have happened so far. So says the data. And that's all we can go by, gang. The data, right? If we just normalize less thinking and feeling when it comes to equity trading and futures trading and everything else, and just say, this is what the data says. I'm not here to argue with the Federal Reserve. I'm not here to judge whether or not they know what they're doing. I saw a lot of that commentary throughout the year. And guess what that commentary was? It was wrong. It was wrong in that saying the Federal Reserve was really going to cause a crash or a bear market. It was galactically wrong, right? So this is where two things. I want to make a point of two things here this morning. One, it does seem that the data that might have derailed December's quarter point cut, flat, means, okay, clear for takeoff. We're probably going to get that quarter point cut. The second part of it is just a reminder that it's still the best bet to buy dips, right? It's still the best bet to buy dips. And take a peek here, right? Let me see if the color that really stands out. Here we go. Right in here is the zone, because this is so much of my career as a trader and frankly a mentor. Don't buy on days like this. So let's get specific. I like the Russell, and the reason I'm bringing up the Russell, it's been on our watch list. If you watch the video from Tuesday, if you watch the video from Friday, where I share oftentimes not only the trades that I have open in the Sector Secrets Mastery, also the watch list that we're focusing on. KRE, RTY, Zion, that whole alignment of the index to sector to stock, it's in play. I wanted to hold off because of CPI, but I really want to make a point. If you like the Russell, I do too, I'm with you. But where do we like the Russell? The where matters so much, right? When we talk about where, we're talking what price, right? What price do we want to get involved? Because just because something's moving higher, I don't want to just say, well, it's gone up to a higher high, it's going to keep going. We don't ever want to do that. And for example, having bought on the 11th, which was a terrible idea, you're better off waiting for that slight pullback, getting long from the gray zone, because at least this morning, you've got potentially at the bell an unrealized gain. On the 11th, you're still sitting with an unrealized loss. All long positions, one's momentum, one's exhaustion. But look, eventually the momentum trade will probably be fine as long as they have enough time before expiration. But the exhaustion trade from a risk to reward ratio will always outperform momentum. But you might say, Rog, so there's no value in momentum? Absolutely not. There is some value. I'm not saying that at all. If we don't get pullbacks, momentum, especially in a parabolic trend, I'm trying to think, anything that's acting, frankly, like a meme stock is going to seldom pull back. So there are going to be situations where that momentum trader is going to do great because there's no pullback, and someone like me waiting for a pullback will have no entry. And that's okay, because I'd rather wait for the preferable risk-reward ratio to act than just hope that someone's willing to buy higher than me, right? And those are just things to keep in mind. All right, first question of our morning. And that's where we are, gang. That's the macro of it. CPI has basically taken away the uncertainty of whether or not the Federal Reserve will cut rates. And yes, we're well over a month away. And yes, we have just about every Fed member speaking this week, including Powell tomorrow. But ultimately, if we're looking at the concern that inflation might, the dark cloud that inflation might be over those rate cuts from a macroeconomic data perspective, that's out of the way. All right, so how would I play NVDA on a one-day time frame? So Munir, I will say I think the TOS platform is fantastic, but straight up, the stupidest thing I've ever seen is TOS's insistence to not only have an aggregation period, whether that's 1 hour, daily, 5 minute, but then this weird thing of how many years worth of data do you want? I'll tell you, I had never seen that until I opened the TOS platform. And people say, Raghee, I'm looking at a 2-year, 1-day chart. What does that mean? It's just a daily time frame. So TOS has kind of added something ludicrous and unnecessary. So, and whenever I'm talking about a daily, the reason I bring this up, and thank you, Munir, for your question. The reason I bring this up is this is completely unnecessary. We just need to know that. So when I talk about, hey, I'm looking at a daily time frame, it doesn't matter how many years worth of daily candles I've got. Each one of these candles represents one session. So I thought this is a great. So when people go, what's a 1-day time frame? It's a daily chart, gang, right? It's a daily chart. So if I'm looking at the daily chart, which is usually how folks would call this chart on any other platform but TOS. I know TOS traders right away because they talk in that parlance, and that's okay. But remember, it's just a daily time frame. If I'm looking at the daily on Nvidia, in terms of what I would want to do, if you've been watching this show for any length of time, Munir, you know exactly what I'm going to say, right, my friend? Green candles. It's actually starting to form an uptrend. Respect the trend that was, even in this choppy environment, rather than presuming it's a reversal, right? Rather than presuming it's a reversal, we expect continuation, and that's where I would focus on the long side. I was watching a video, speaking of assuming retracements versus reversals, presuming this continuation as opposed to capitulation, right? If there are things that are going to help you in your trading career, please, 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 if you're going to err on one side or the other, err on the side of continuation. I'd rather be wrong presuming a trend is going to continue or that a trend taking a break is going to, I'd rather be wrong on that assumption because I'm going to be right more often than not. So that's the same thing here. It's turned back into a trend. Linear, gorgeous, excellent. It's my favorite stock, by the way, in the semiconductors. We could look for a mean reversion, but I'd rather wait for the daily price movement range. And that's what I'll do. Now, if I've got a trend on a daily time frame, right now we're pushing out to December 20. I'm not talking about having Nvidia for a investment or long term. I don't see any reason at this moment to move out to January. I think that's probably overkill. And if I look at, let's see here, what would our third, so January 17. Remember, the further out we go, the more expensive it is. However, let's talk about the shorter end of the yield curve with Nvidia. I don't want the 15th, right? I've got 2 days. The 22nd of November is not bad. It gives us at least 9 days. So you could go there if you'd like. And the 29th of November, if I have a second preferred time frame, it'd probably be the 29th of November if I'm not going to go out to December 20. But then there's another thing that comes up. We talk about this a lot in the Sector Secrets Mastery, which is budget, right? How many dollars do you have to dedicate to the trade? Everyone's number is going to be different. And in that regard, maybe the November 22nd may not be a bad idea. And hang on one second for me. When is earnings are coming up, right? When are earnings? The 20th? So that's the other problem, right? Earnings are on the 20th. Earnings are on the 20th. So actually, November 22nd would probably be fine. Yeah, and frankly, Munair, because of that truncated time frame of 1 week to earnings, I'd probably be really leery about buying more time than I need, right? And so probably the closer expiration, but not the 15th would be fine. Just make sure there's, yeah. No, it's not guilty. No, not at all, Munair. It's just funny, I can tell, because nowhere in trading does anyone ever say I'm looking at a 2-year 1-day chart, because it just doesn't exist, right? It's just an odd thing that Thinkorswim did when they started. Yeah, it's just kind of funny. No, it's fine. I use the platform all the time. I think it's great, unless you actually want to protect your intellectual property, in which case they don't give a rip. So it's a great platform. All right. ANET is the next question. ANET is the next question. And let's see. It's a spendy name. That alone, I will just warn traders, hey, when you're trading a stock that's a little bit spendier, your options are going to be a little bit spendier. So budget becomes a thing. Clearly, Joe, it's not an issue for you. And that's great. If you're looking at ANET, what would I see on the chart? So let's go back to everything we talked about with Munair's question, right? If I look back to April, if I look back to October, whatever, however far back you want to go, most of the trend that we've seen in this year in 2024, most of the trend has been up. If it's not been trending, it's been moving sideways. So what's been dominating ANET this year? Overall movement higher with prolonged periods of sideways movement. In every one of those sideways movements where the trend higher is what preceded it, you notice we continued? May not be pretty, might be kind of volatile, but if someone said, Rag, the trend that was in August, September was up, and now we're chopping, what would you do? Look for long positions, oversold buys. The trend that was in October, as I'm in November, was up, right, Joe? Good looking stock. It's just a little tougher because it's been a little bit more volatile because of those prolonged periods of chop. But again, if you go back to what I said, if you're going to err on one side or other of trading, err on the side of continuation, err on the side of, as we like to say in the Sector Secrets Mastery, respect the trend that was. I have one pattern I use for reversals, and it needs so much specific criteria. The setups are very, very rare by design. I have one particular price pattern. I don't use chart patterns. I have one particular price pattern that I use, And the instance that it is viable and valid by design is rare. So that said, I'm always going to favor, as often as I can, continuation. And you can see that's absolutely been working. That said, specifically to the price, I'd say this area just above 380 where we have a nice Darvis level. I'd wait for a pullback to that area. And frankly, anything, well, if you want to be a little bit more flexible in the zone, I'd say anywhere between 394.20 to 381.5. All right. So again, in terms of follow through on a daily time frame, yeah, I'm going to be looking for follow through over the course of the next 2 to 10 days. But again, if I'm looking at swing trades, the minimum amount of time that I'm expecting to be in would be 2 to 10 days. But if I've got a December 20 expiration, it's not as if on the 10th day of the open trade, I just closed the trade out. I've got up until December 20's expiration to manage what has been a fairly reliable movement higher. All right. So, yeah, thanks for the question. Next up is shop. Sure. All right. What do we have on shop here? What do I think of shop? And I'll tell you, Fresh Fred, I like the name. Absolutely nothing. Absolutely nothing. I don't think anything of it at this moment. And here's why. We had earnings. You can see that there before the bell on the 12th. So shop. And does everyone know I detest earnings? It's just become a spectacle that need not be. Wouldn't it have been so much better if shop eventually got to 108 and did so in a slow methodology? I never say that. In a nice method. Oh my gosh. I always stumble on this word. Methodological? No. In a nice, consistent way. Someone help me out with this darn word. Some words my mouth just won't do. My mom says the same thing when I'm speaking Bangla with her. She goes, you just don't have the pronunciation. Probably true. All right. So when I'm looking, methodical. There we go. But she gave it to me phonetically. Methodical. Methodology I can do. I can make up words. Methodical. Boom. But I feel so much better about myself. So wouldn't it have been better if it moved higher that way? In my opinion, yes. Because otherwise I'm having to make a binary guess about whether something's going to gap up, right? 18 points or maybe gap down 18 points. I always think about not just the thrill of victory, but the agony of defeat, right? We got to think about both sides, the risk and reward. And I place a whole lot more emphasis on the agony of defeat, not the thrill of victory. That said, Fred, if it can pull back a little bit more meaningfully, I would look to the long side. But yeah, the spectacle of earnings is just really, I mean, look at IBM and a lot of other stocks, IBM, NEM, something about a stock that ends in M has been particularly brutal around earnings. IBM was one of the most gorgeous uptrends for the better part of 3-4 months. And then whatever nonsense, is IBM that much less of a company because whatever hyperbole and intensity seems to be on earnings? Probably not, but look at the way, boom, right? Newmont Mining. You could have sworn that the CFO or CEO basically said on earnings day, we're going out of business. There's no more gold to mine, right? Oh my gosh. Craziness. And look at this one has yet to recover. And so that's where I really detest earnings. Maybe more so than even buying at highs. It's up there. However, I think keep an eye on it, wait for a pullback or shorten the time frame. Fred, it's a good looking name. It was a good looking name before earnings. Now it's obviously out in the stratosphere, but maybe shorten the time frame and take advantage of short-term swings. Yeah. Methodical. All right. Next up is Taiwan Semi. TSM. That'll be our last question, I think. Jess? All right. TSM. Do I like TSM? Let's go back to what would come before any nibbling on TSM in this current pullback. So Jas, the question before the question is TSM on the watch list of names that I would want to buy in a pullback? Is it a relative outperformer within semiconductors? And that's where I have to say probably not. The names that I want to focus on are first and foremost Nvidia, and then after that, probably Intel or Texas Instrument. And then after that, probably things like Taiwan Semi. Right now, I've kept much more of a finite focus on SMH, where the only thing I'm interested in buying a dip on is Nvidia. So if I'm not gonna do it, right? If I'm not gonna do it, then I don't want to recommend. Yeah, go ahead and nibble. No. And by the way, I don't like to nibble anyways. What is that? I don't want to nibble. Either there's a setup and I can manage risk, but I don't think about nibbling. I think about, hey, there's a setup. I like the risk reward, and I just do it. So Nvidia really only. Okay, gang, as always, thank you so much for being here for Charts and Coffee. Methodical. Look at that. I'll see you tomorrow. Same time, same station.